Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 6th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I go a little bit further and talk about these option strategies I'm implementing into my portfolio based on those assumptions I come up with in my market analysis. And for you folks, we've gone even further and streamlined that process for you folks to find the optimal option strategy for any given assumption. We don't just pick option strategies out of a hat here at Pro Trader Strategies. It's not a bullish assumption you just grab a long call. That will work sometimes, but what is going to be the best suited option strategy for that underlying that we have a directional assumption is? That's what we're getting down to here at Pro Trader Strategies. And I believe I've streamlined that process so you guys can easily spot the best strategy for your directional assumption there. All right, let's get on with the economic data. Across the pond, really not a whole lot to see there. But here in the United States, we got our JOLTS job openings number. Now remember, we've been seeing, well, about 2-3 weeks ago, we were seeing some iffy numbers coming out of the manufacturing sector. Now we started seeing the ISM numbers do pretty good across the board, really, especially here in the United States. And further, we got the JOLTS job openings. We saw a good unemployment number, and it's continuing to show these good economic data points. So it's not just like a one-off, and it's being pretty solid numbers coming in. And this came in at 7,370,000, expected to be 6,910,000. So just knocking it out of the park by close to 500,000 more job openings than what was expected. They also revised last month's number up nicely from 6,900,000 to 7,100,000. And keep in mind, these numbers above 7 million is the first time that we've really seen it since before the pandemic. So we are getting back to pre-pandemic level on these jobs openings. So that is good. That means that companies are looking to hire. That means that they obviously believe that this economy is starting to get moving along. And we're seeing that across the board in just about all of the economic data points here in the United States. So upside would be the risk in equities as far as I'm concerned moving forward. We're also still seeing a lot of people talk about the Fed raising interest rates. Yeah, not this year, maybe not even next year, folks. So 2021, 2022, probably not going to see the Fed raise interest rates. They're going to let this economy start to pick up a little momentum here, I believe. All right, one of the dogs wants to see the video, I guess. All right, so let's get on with the overall markets. And with that said, we've got the equities, like I said, moving higher here. We can break down the E-mini S&Ps on the daily chart. You can see a new all-time high here in E-mini S&Ps. We're just going to have to flip through this old school. And as we were seeing here, that print was, or in the last screenshot there, we saw that equities, we're making a new all-time high during the day session. Another good print there, but we're going to keep an eye on this. Even a finish near the highs of the day today could look a little bit toppy here in the markets for equities anyway. And we got the mini S&Ps looking like that topping pattern that we're seeing here in the NASDAQ. The Dow Jones Industrial Average is also trying to create a little bit of an iffy top here. Yesterday was the all-time high, but today trying to claw a little bit of upside momentum in there, but it's probably going to make it look a little bit more like a topping pattern there. Still in the teens in the VIX, as we can see here, not really doing anything, but I would expect some people to start looking to add some protection here is my guess. Why? Well, we're seeing good economic data. You would say, hey, that means we got upside momentum, right? Well, a lot of times the markets like to put as much pain on people as it possibly can, and that would be a time where everybody would expect this market to move higher, and we get that move to the downside. Gold futures are moving higher here, lockstep with like Bitcoin. Actually, Bitcoin is off on the day now. Earlier today, I haven't checked it in a while, was higher on the day. and we've got the bonds moving higher, just albeit slightly shy of 1 full point to the upside, and crude oil is moving to the upside. I was expecting this to see a little bit more weakness here, but with that strength in the overall economic data points, that's going to lead people to believe that there is demand for crude oil and going to drive this market a little bit higher there. Something to note with what I've been doing, keeping an eye on Deere. I do have a bearish position in Deere that's not working out really, but today we're getting a bit of a pattern here where we might be losing some momentum here. So looking for this to hopefully roll over at some point. And I did cover my Apple April 110 puts yesterday for that 10 cents. So out of all of my Apple, get any type of roll over here. We're bumping up against this 200-day simple moving average here. That is going to act as resistance, and we've got a point of control just slightly below us. So are we going to get a little bit of rollover, maybe test the 120 handle here, which is lining up with our 50 or our 78 Fibonacci there? That is just above that point of control. So I do think that the market will probably revisit the 120 here and the Fibonacci that lines up with that 78 before we start making a move to the upside there. And that's really all I've got going on right now. A couple of other things that are working out nicely. We got a big move to the upside today in our, in our snap trade. So it's not quite close to where I want to get out, but at the end of the day, we are getting some moves to the upside here and a couple of dollars short of my target there, which is right there at 60. We are finding some resistance here at the 200-day simple moving average. I believe that, and we are finding some resistance there, but that lines up with that Fibonacci also. All of those things kind of slowing this momentum towards that $60 handle. I'd like to see that clip once, and then I'm going to be out of this because you guys remember I have on the June 60 calls that I'm long. So it'll go up there, clip that strike. That's where I'm looking to exit on this trade, just like we talked about in the webinar on last Thursday, how to set up a long call strategy. This has been executed so far like we planned, had a bottoming pattern, confirmation, the upside continued now, and we have our target very close in sight. So we're keeping an eye on that. Hopefully a bit more of a push maybe today or tomorrow, and we'll be able to get that 60 handle printed. All right, that's all I got for you folks. Take a moment to go over the disclaimer as we are an educational company, and if you can't take that, take it easy.